Well, good morning, everyone. It is 10 a.m. and we will convene the September 11th, 2025 meeting of the Oklahoma City Employee Retirement System. Item 2 on our agenda this morning is to approve the meeting minutes from August 14th, 2025. I have a motion and a second. Please record your vote. Item is approved. Item 3 is the consent docket. We have 5 items that we can take with one motion, please. We have a motion and a second. Please record your vote. Item is approved. Item 4 is to ratify approvals. I have a motion and a second. Please record your vote. Item is approved. Item 5 is to approve the claims docket. We have a motion and a second. Please record your vote. Item is approved. Item 6, approve the following applications for service retirement. We have a motion and a second. Please record your vote. Item is approved. Item 7, receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Item 8, receive report of death, authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Okay. Item 9 is items for individual consideration. We have one item, item 9A. We have a motion and a second. Please record your vote. Item is approved. Item 10, receive the investment consultant report. Item 10A is the monthly investment report.
Morning.
Morning, Jason.
Moving right along this morning. So a good month in the capital markets for the month of August. I think what we're seeing as we look at client portfolios continue to be good absolute returns, trending above your required return hurdle. Relative returns relative to policy benchmarks and even individual asset class benchmarks has been a bit challenging for reasons we continue to talk about for the last few years. The market has really been driven by a handful of companies. The S&P 500, the top 10 stocks in the S&P 500 make up close to 40% of that index. Those are all predominantly mega cap growth companies. Just to point out the differential between growth and value over the last year, Russell 1000 growth is up 29%. The Russell 1000 value is up 11.6%. I was just looking at the stats. The Russell, both of those are sub indexes of the Russell 1000, so the largest 1,000 companies in the US. The Russell 1000 growth is about 300 names, companies, and the Russell 1000 value is over 800 names. So there is actually some overlap in those two indices, but that just gives you an idea of how much the very largest of those tech companies is driving the market. As we look at our policy benchmark for this portfolio, we're using the S&P 500 to represent not only large cap, but private equity in the portfolio. So the policy benchmark is 30% S&P 500. We don't have 30% of our portfolio in the S&P 500. And then again, that index, 40% of that is the top 10 names in that index. So we're underweight those names that have been doing the best. But as I think, if we think about how this portfolio has been structured, historically, we've put the portfolio together to participate when markets are going up, and you're certainly doing that, but to protect when markets are going down. So that level of concentration, we have more diversification in the portfolio that should provide us a benefit in more challenging periods. Right now, we're looking at a period where, while it may not seem like it, but everything is up over the last decade. And I jotted these numbers down this morning. This is through yesterday. With the exception of fixed income, the Barclays Ag is up 2% annualized over the last 10 years through yesterday. Large cap US, small cap US, international developed, and emerging markets are all above your 7% actuarial required return hurdle rate. That said, US large cap is up 17.5%, which is about double the return of all of those other asset classes, even though they're all above your required return hurdle. So the good thing is, for a pension fund, markets have been good. We're starting to take out that bad year of 2022 over the long term, where we saw equities and fixed income down, and smoothing in some positive return numbers. Looking at your portfolio, if you just go to the next page. Oh, I can do that, right? I keep always asking you, I'm sorry. I forget that this mouse is here. From an asset allocation standpoint, we're pretty close to the targets across the board. A little bit overweight to equities. You see there in the middle of the page, 62.5 versus 60. We are overweight to our target to large cap, 20.5 versus 15. That is the underweight to private equity. At the beginning of, really over the last few years, we've been ticking up that target allocation to private equity from 5% to 10% to 15%. So we're not there yet in terms of invested. So that's helped on an allocation basis a little bit, but just not having as much as what's in the policy index has been a bit of a headwind. And I'll point that out here in a minute. From a rebalancing standpoint, we continue to use large cap as the source of funds. We talked about and did some education yesterday. But for a mature system like this, your cash needs, your ongoing operating needs for benefit payments is our primary source of rebalancing. So we're constantly using that to take down risk in the portfolio, and large cap has been the source of that for a couple of years now. Fixed income and real estate, approximately in line with targets. Real estate, we're a little bit under. Most of that is the opportunistic real estate, where we've got some new commitments that haven't been called yet. Looking at performance, as I'll point out, the 1, 3, and 10-year returns, net of fees, all trending well above your 7% target. But as I mentioned, trailing the policy index by a bit. And most of that is it's just not having as much U.S. large cap as what is represented in our policy index. Much of that is coming from private equity, because the S&P 500 is also representing your 15% target to private equity in the policy index. Over a long period of time, we would expect private equity, due to the illiquidity and the inefficiency in that market, to provide a premium return to public markets. At this point in time, measurement time, we're not seeing that. You see this 10% of your portfolio up a little under 12%. So a very good absolute return, but if we compare that to the S&P 500 up 15.8, that's where a lot of that dispersion is coming from in the short term. Probably about 100 basis points of that. Non-U.S. has been one of the better on a year-to-date basis. Non-U.S. is the best performing asset class as we've seen dollar declines. That has been a tailwind for the first time in a decade for your non-U.S. investments. So both emerging markets and international developed up over 20%. You see in that year-to-date column. So the best performing asset class overall. Managers are trailing a bit there. On the international developed side, the 1, 3, and 5 years, some of that is due to, in Harding Loevner, your growth manager, they have about a 30% allocation to emerging markets. Emerging over 3, 5 years has lagged developed markets by a bit, and that's causing some of that dispersion there. On the emerging market side, the real challenge has been we have a small allocation, about 1.5% to emerging market small cap through Wasatch. Wasatch is significantly overweight to India relative to the EM index and underweight China. China has been the best performing country, up about 30% on a year-to-date basis. So having less of China right now has been a bit of a headwind. On the fixed income side, certainly much more modest returns than we're seeing from equities, but really comparing to what the fixed income returns have been over the last decade, pretty decent absolute returns from bonds over the more recent period. So a 6.5% return year to date from your overall fixed income, as we've actually seen rates declining a bit. Just this morning, the 10-year Treasury hit 4%, so that's down about 50 basis points on the year. The jobs number was a little bit weaker than expected. I think that's what we also somewhat negative news on the jobs front has buoyed small cap and bonds over the last month as the expectations for a rate decrease are increasing. That helped small cap rally. You see in the month, small cap was the best performing asset class, up 5.25% on expectations of lowered rates. And lowered rates also creates price appreciation in fixed income. So you've got a pretty big bump on a year-to-date basis in your fixed income. Real estate starting to turn around the last couple of years. Real estate has been really the worst performing broad asset class. Longer term, the purpose for real estate in this portfolio is to provide some diversification to stocks and bonds and some inflation protection over time. We've seen a pretty significant cleaning out in terms of valuation in the real estate markets, particularly in the office sector. That's really bottoming it out, and now we're seeing positive returns for the last few quarters in real estate. More importantly, as we look out over 10 years, as we would say when we look at asset allocation, real estate should provide a premium return to fixed income with less volatility than equities. And if we look over that 10-year period, real estate, a little over a 4% net of fee return versus fixed income, you got about the benchmark up 1.8%, so about over 3% premium return. Certainly less vol than equities. From a manager standpoint, continue to monitor all the managers. No managers of concern. We've done a pretty deep dive on small cap, the overall allocation, and your non-U.S. equity over the last few months. While it's been choppy of late, we're still comfortable with the allocation of the managers. One that I will point out, Silvercrest, this has been a manager that has been, as we've looked at them, it's been a bit challenging over the last couple years since you've initially invested in them. They replaced Times Square at the end of 2022. Since that point in time, you don't see the historical 3, 5, 10-year numbers for Silvercrest. The reasons why you hired them, where they had a very strong track record predating the point in time you hired them. over the last couple of years since the bottoming of the market in 2022, larger cap companies within the small cap market have done better. They tend to focus more on the smaller end, tend to be a little bit lower quality. And when the index rallies, that helps lower quality rally. Surprisingly enough, all the stocks are going up. You saw a month like August where the index rallied on the just broadly because of expectation of rates coming down. That's a big tailwind for Silvercrest, and you see a pretty strong month. That's generally a one-year type return number, 9.5% return in the month of August, about 3.5% above the benchmark, so really good return that month. Overall, continue to we're looking at opportunities in the private markets. Haven't had much activity in private markets this year. We've made a couple of commitments early in the year to Francisco and Berkshire. I think the Berkshire was actually done at the end of last year, but they just called money in June of this year. I anticipate we're probably going to have a couple of recommendations on private equity funds either next month's meeting or November. A few of your existing managers are back in market. Warburg Pincus Global Growth Fund 15. You see their last fund was in 2022. They're back in market. Probably going to have a close before the end of this year with their next fund. And also TrueBridge. This is a venture capital fund of funds and a secondary fund of funds where they're investing in more mature private equity funds and buying at a discount. That's what the secondary fund is doing. That is back in market as well. We anticipate probably having some recommendations on those strategies prior to year end as we continue to build out your overall private equity program. Any questions on market or the report?
Any questions this morning for Jason? Thank you, sir.
Thank you.
Chair will entertain a motion to accept the monthly investment report. I have a motion and a second. Please record your vote. Item is approved. And item number 11 is comments from board, staff, and citizens. I know Gina has something she wants to bring us up to speed on.
Good morning. Just wanted to bring the board the notice that we're going to need to have a special election. We have 2 positions that were elected positions that will be vacant towards the end of the year, so the office is working on getting the nominations together to hold the special elections. So, any questions on that?
When will that be?
We intend to announce the notice tomorrow with nominations closing middle of October. So we're trying to have everything wrapped up by the December meeting.
Okay. Sounds good.
Okay,
Thank you.
thank you.
Anything else for the good of the cause this morning? Okay. We are adjourned at 10:18. Thank you, everyone.